I have received several messages from the last couple of days, over the last couple of days, about how I trade. It's a little bit different than what Pat does. He is a better trader than I am, no question about it. I'm sure, although we have never discussed it, I have no idea how much is in an account or how much he makes. I have no doubt at all that he does extremely well. He talks about doubling his account every year, and based on what I did last year, I would say that he does do that. But my trading is a little bit more relaxed in that I don't set alerts. I set stops. I set buy stops and I set sell stops. And I'll set those on products on the key list, either the night before or the morning of. So I'm going to just go through some of these that are on my list. And most of these are from Wednesday's key list. And just kind of give you an idea of what I do. Because what I'll do is the night before is I will go through and pick the ones I like. So for instance, here on Google, I'm going to just zoom in so I can grab Wednesday. Actually, I wanted to go one day beyond, one day back, if it'll let me do that. There we go. And so we are on 7/20. Okay, so this is Tuesday, 7/20, and I've just gotten the key list for Wednesday. I'm gonna look at these stocks and determine what I might want to put a buy stop on. And I look at Google and it just regained the 21. So I look at this and I say, you know what? It looks okay, but it's a little bit of an aggressive entry. I sometimes will pick stuff up on a pickup off the bottom here or a bounce off of a moving average, but Google is kind of an animal for me. Okay, so I respect it. It's a high flyer, and I respect it. Although I do like the tight trading, okay, but I did take a pass on this, and it's just my own personal preference. You'll find that you have personal preferences that you develop over the years of doing this. Next one's on the key list is Step. And once again, we're going to come back here and we're going to look at this, okay? And I looked at this and I said, you know what? It's got a big move, and the trigger price on Step was $41.10. So I just felt like it wasn't a high probability trade for me, although it's in a top group and it's at the top of the list, which is where I start. I start at the top of the list because that's where the top groups are. And I just felt like it had made a move, and I wanted to see if it had tracked sideways a little bit. Okay, and I was wrong. I was clearly was wrong. And those of you who bought it, good job, because it did very, very well on Wednesday, and then of course yesterday's Thursday, and then there is today, and it's still looking good, looking really good. So on to, and you know what I'll do? Let's just go to the next one here and see how this looks. That's not too bad. AMN. I want to pick one. Well, I'll just pick one that I did for sure. So here's one that I did do. I trade Facebook back and forth. I've got some shares from lower, so of course that helps. But let's zoom in here just a little bit, and I want to go through what I do with these. Okay, so this is Tuesday. Again, this is Tuesday, 7/20. And just got the key list. So I look at the key list, and on there it has a trigger price of $343.50. In fact, it's the top one on the list. Top one on the list. So I know it's in a good group because it's the very top one. And I don't even have to look at that. I don't even have to check that. Pat does that for me. And with a $343.50 trigger, okay, it's going to trigger well, I won't be able to get my cursor exactly on it, but right in that range, okay? And so when it triggers, it's going to be regaining both the 21 and the 8. I like that. That's nice, okay? So what I did do, is I put a stop in, a buy stop, to buy it at $343.50. And one of the first things that I know that folks that look for volume will say is, well, you don't know what the volume is yet. No, I don't. I'm going to get to that. I'll tell you exactly how I handle that. So let's go to the next day. Let's go to the Wednesday, the 21st. And it popped. So I'm in the trade. So I'm going to go down to a 15-minute chart because I want to see what the volume was. And we're going to have to go back here to the 21st, and I'm gonna zoom in. I'm gonna zoom in from here to about there. So this is the action that happened on Wednesday the 21st. So I'm in the trade right here at 343.50. If I get my cursor on it, there it is, right there. So it's at the very top of the range, and the very next bar, it pulls back. But I'm still okay, because where's my stop? My stop is under low of day. Okay, I will risk $2 or $3 on a $350 stock. Okay, that's reasonable. And what does it do on a 15-minute chart? It violated the 8 here just a little bit, but it pretty much just tracked right up the 8 all day long. So I'm happy with that. Now, I checked the volume on it, and we had a little bit of a volume spike. I mean, it's nothing like we saw back in here or in here, but there's a volume spike, and I like it. It's okay. Now, if it wouldn't have been a volume spike and it would have, immediately come back down and started to penetrate through the 8 on a 15, I would have cut that position down. Now, it's not a full position anyway, but I would have cut it down. And I wouldn't have had to been sitting here to do it. In other words, when it triggers, when it fires, it does it. And I may not be in front of the computer. As you well know from the last few days of having me around, I don't sit in front of the computer all day long. And I would say, estimate, people ask me, how long is it? Oh, I'm probably in front of the computer 4 out of the 6.5 hours. That'd be a rough estimate. But I'm back and forth. I'm upstairs. Give you a little insight into Owen's life. I'm upstairs. I do laundry. I do this. I might even vacuum. Okay. My wife loves that stuff. You wives out there, you probably understand exactly what I mean. So anyway, I would have been out. And it's easy to get out today, because commissions are almost zero. So when something triggers, and I might have 2 or 3 or 1, I might have several buy stops on several things. I don't go hog wild. I don't put in a buy stop on everything. Generally between 0 and 3. Those are my buy stops for a day, depending on what I have in dry powder to put into the market. A couple of weeks ago or a week ago, I forget, time flies so fast, but I made a post. Somebody was asking how much are you invested? And I said, golly, I looked at it and I'm like, I went from whatever it was down to 9%. I remember I was down to 9% invested. Well, then over the course of the next few days or so, man, I got back into the market. I was 70% invested again, and probably right about that right now. I don't know exactly, maybe even a little bit more. But it's really easy to get out there. Pat will say, you can go out in the margin in one day. I don't recommend that unless you've done it before, but you can. I mean, markets move, and you have to be there to take advantage of them. So if this were to come back down here and fail after it filled on my buy stop, then I would cut that position down, or I would completely exit it. So after a buy stop fills, I evaluate the trade, whether that's 5 minutes later, whether I'm sitting in front of the computer, whether it's 5, 10, 15, 20, 30 minutes, whatever it is, I evaluate and I look at it and I determine, do I want to stay in the trade? Okay. Do I want to cut it down by 50%? Do I want to cut it down maybe by 25%? Or do I want to exit the trade completely? And I will do that if I don't like the action. But in this particular case, it worked out really well. And I'll go through every ticker for the most part. Sometimes I'll get down to like 10 or 12 and I'll say, okay, that's enough. I've got my 2 buy stops in and I'm done. And then I won't look at the rest of them. And that's certainly how to miss moves. No question about it. You can miss stuff like that. But I know this from doing this. Here's one thing I absolutely know is true about the markets. There's always another opportunity coming. We never run out of opportunities. So I never get upset about missing something. I never get upset about not selling at the right place. I just manage it. I manage my risk, and I just take another trade and another trade and another trade. And that's really what it's all about. It's just continuing to take those trades. Now, I have taught in personal videos. People send me questions, and I'll send out personal videos. People just getting started. And this is what I was taught back in the early 2000s, even before I met Pat. Prior to 2006, I got connected with Thinkorswim in Chicago. This is back in the Thinkorswim heydays, and I was working fairly closely with Tom Sosnoff, Scott Sheridan, and those guys. One of the things that they taught was just do one lots. Just get started, get your feet wet, do one lots, and that's what I've done with stocks. Back to get started, I would just do a few shares. And it's tough back in those days when I started to actively trade, 2002 to 2006 range, because we're paying commissions of $15 or $10 or whatever it was. I remember the first online platform that I used was CyberTrader from Schwab, and I think it was $9.95 a trade, in and out, one way and then back out again. Well, today it's so much different. So this is what I recommend today when folks ask. I say trade 5 shares. Why 5? Because Pat sells off in 20% increments. You've got 5 shares. Well, you can sell 20%. So you buy 5 shares, and then when Pat says sell 20%, you sell 20%. You say, well, what if I'm going to trade that Pat's not in? Well, that's okay. Let's go back to Facebook. On Facebook, we're going to just go back. I'm just going to zoom in here and just grab this one more time. And is this the 21st? That's the 23rd. So here is the 21st back here. This is going to stretch it out too much, but that's okay. All right, so here's the 21st. So on this, I just rode the trend all the way up. And then, was it yesterday that I added to this? I was adding to trades at the end of the day. Okay, I posted that I was adding shares to a number of different positions. It was yesterday at the end of the day, because I was out most of the day yesterday, and I came in for about the last hour and just traded DOD. So I was adding shares here. Well, then today, even though Pat's not around, when it came up into here, I actually posted it. What was my post? I sold it at 362.65. And the reason that was is because in this first bar, again, we're on 15-minute chart. This first bar came down and penetrated the 50 a little bit, but touched off. And then we get this topping tail. Well, you know how Pat is about topping tails. Well, there's a reason for that, because when you've got a topping tail like this and it's pushing it all the way back down here, and it's got some pretty decent volume, you got to take heed of that. Well, then on the next bar, it pushed higher, but it did it on less volume. So I just thought, I'm just going to take a little bit off. I've got a little bit of a cushion in it. I'm going to take some off, which is going to give me a little bit more breathing room. So I put in a sell stop order. Okay, so I set a sell stop for 362.65. 362.65, right in that range. Because I figured what would happen is it would come up here, it would come up to this point, and it was going to do one of two things. It was either going to push through, which is what it did, of course, or it was going to resist, and it was going to come back down here and possibly make another low, and maybe even a lower low. So that's why I decided that I would just take 20% sell into strength. Okay, still in the trade, just managing it. And that's what you need to learn to do. Okay, you need to learn to do that without Pat's guidance, waiting for him to post trade. Pat's a great teacher. You can't sit there and wait for him to post a trade. I guess that's the point. Part of the point of my video here is that don't wait for Pat. You don't know what he's doing. Okay, he doesn't do stuff outside of Mission Winners. I mean, I know that, but I mean, he's very adamant that whatever he's in, you guys know about. And he lets you know every time he's making a trade. But he may be fully allocated. I don't know where he is. I'm not really sure. And when he's going on vacation or going away for a few days or getting out of the office for a few days, he's going to pare down his positions. I mean, that was something that's in my mind too. Not that it made me do this or not. It's just that if you start to own your trades, it will change your trading life. I promise you. If you, every time Pat says, I promise you, I think, we better check with legal on that. Trade a few shares. Trade those 5 shares. Get accustomed to it. And if Facebook, for instance, is a $370 product, if it's too much of a high flyer, that's okay. Pick something that's more manageable. Take Step, for instance. Step's a $45 product. Trade something that is more in your comfort zone until you get comfortable in doing this. Buy your 5 shares, sell one into strength, sell another one into strength. If things work out and you can add to it, add to it. It's only a share. Makes a huge difference. But once you have real money on the table, it changes things. And you learn to manipulate your account. You need to manipulate those positions in your favor and build them and take from them and continue to work with the market. You get in sync with the market. Just to recap, come back here. What I do is I go through the key list. I'll pick somewhere between 0 and 3, and I'll put those buy stops in for the next morning. Now, if I'm doing it at night for the next morning, in the morning, I will check it. In other words, I'll put those buy stops in at night, but then in the morning, I'll check those because I want to know if they're gapping up. Because if they're gapping way up, well, my buy stop is going to fill, but it's going to be much higher than I want it to be. So if you can't check your trades, if you can't check those in the morning, you want to maybe put them in the morning, or make some accommodation so that you can verify that what you've got in there as buy stops are going to be valid, that you're really going to want those. They're not gapping up on you, is what I'm saying. Then I just look at the trade. 5, 10, 15, 30 minutes later, after it fills, I look at it and I evaluate. Do I want to be in? Do I want to cut by 50%? Do I want to cut maybe down to 25%? Or do I want to exit the trade completely? And that's how I get into these positions and then continue to work them and build them. Okay? Work them by selling a little bit into strength, or build them by adding on as they move up. In a whippy market, you want to sell some into strength. I mean, I'm very concerned right now. We all are, right? We're at all-time highs. The market continues to grind higher. I understand that the Fed is continuing to dump money into the market, and that's what's holding this thing up and continuing to push it and grind it higher. But it seems to be logical that there's got to be a point at which it's going to correct, whether that's going to be a 10% or a 15 or as deep as a 20. But just manage your risk and pay attention to what you've got and keep doing little bits all the time, little bits. One of the things I think that can be very detrimental is watching action and not being involved at all, and just having that constant feeling of loss that you've missed out. If you've just got a little bit, just a few shares in the market, you're making a little bit, not much. I mean, I understand you're not making a lot, but you're learning, and you'll be able to increase those shares over time, and you'll feel better about it. Emails I got, I think people are kind of playing on, well, Owen, you seem to be trading differently. I'm not. I do. I mean, I do. I'm not. I don't use alerts. I use stops. A lot of my stuff is automated. I just like it that way. It's more comfortable for me. You've got to find out what works for you. And the only way to do that is to start doing just a few shares and find your comfort level. And then from there, you'll start to develop a trading strategy, profile, plan, whatever you want to call it. You need to have that. You need to know, if this happens, I do this. Pat's big on that. If this, then that. And you'll develop that over time, but only by doing, not by studying, only by doing. Hope that helps.